what advice can you give people that are currently buying a house? What are the big no-nos that they should be staying away from if they're, trying to get a mortgage soon?
Do not make any big purchase.
Let's say you have someone with very little credit and they want to end up buying a house.
Great question. This is something that we encounter on a daily basis. The first step is add yourself to somebody with a good credit score.
Today we have with us Bryan Zadeh, my good buddy. He's a lender with Guaranteed Rate, and he's going to be talking to us today on how to increase our credit scores. Bryan, thank you so much for joining us. Tell us a little bit about yourself and about your company, please.
Thank you very much, Jason. It's a pleasure talking to you as usual. I work for a company called Guaranteed Rate. It's one of the largest lenders in the United States and one of the most trusted one in the purchase business. I'm a branch manager here, and I have been in this business more than 10 years now. I can't even believe that. So, we're going to be talking about credit, one of the most interesting topics for me. I'm considering myself as a credit junkie. I check my credit on a daily basis, sometimes 2-3 times a day. We have some contest with my wife whose credit is going higher and how. And that caused me to learn about credit along with my job and try to demystify this credit report and score.
So the real reason that you're a credit junkie is just because you want to beat your wife, right?
I wish.
All right, Bryan, so tell us, what are the most important things to know about your credit score?
That's a very good question. I think in order to do that, let me break down a little bit of a history about credit report. Long time ago, banks wanted to kind of have a system to know how and who to lend. And they came up with this story of let's have a score for each person that I can basically rely on saying, okay, this person is this number, this person is that number, so it's better to lend to this person because this score is higher. Like a score for school you get for your grades. They come up with different formulas and they basically spread them on themselves. It was just recently in Dodd-Frank that we were exposed to all of these, how the credit score works. Still, we don't know because they keep changing it and deliberately trying to keep it a secret. And one of the ways they do that, they use different formulas for different credit scores. I'm sure you have seen it, that you check one place, your credit score is one number, you check another place, you see it's a different number. Before that, I would say about 5 years ago, when somebody asked me, I said, my credit score is this. They thought they just have one score. And that's not true. What happened was because they devised formulas for different purposes. For example, for credit card, they use a different formula, and they use for car loans. Car loans tend to have higher credit scores. Somebody came to me and said, my credit score 865. I'm like, it's not possible because the max is 850. And he showed me, and it was 865. And he realized, oh, this is a different type of score. We're using it for cars, and I'm going to be using a different credit score. So if you are surprised with different credit scores, one of the most complicated ones is the ones that we use. We use actually 3. We use for all 3 credit bureaus when we're doing a purchase loan. And it's one of the most sophisticated and older versions that consider so many things. A lot of the times, not necessarily 100% of the times, it is lower than credit scores that you see in the credit cards and your bank account that shows you your credit score. So having said all of this, how it is calculated is based on many factors. one of the things that you have to consider that when Dodd-Frank came into play around 2008, they passed a law. So every 365 days, you can check your credit report, not score. Make sure you go to annualcreditreport.com, report.com, not score. A lot of people type score and they go to these marketing sites and they sell you some sort of a credit score that might not even be a good one. And you can get those for free from your bank account or wherever you have a credit card or some sort of a credit. But credit report that you're going to get is the one that is designed for you and has everything. And some of the people who have long story of credit, long history of credit, they see many pages, 20, 30 pages of information on them, depending how they have treated their credit. So it could be really long and hard to read, but I encourage everybody to check it every year and get familiar with that.
Well, I'm like you, man. I'm checking my credit score like weekly, if not daily.
It's a good idea.
Trying to beat you and your wife and have a higher score than both of you.
Game is on.
So you mentioned that there's a lot of different factors. What are some of them that you know about, like that how they what system they're using and how they go about coming up with these scores?
Okay, so one of the first things that they look is what is your history? What is your credit history? Let's say somebody moves to the United States and wants to get a credit card. The first thing they check is they check how much history they have in credit. And they realize, oh, nothing. They usually say not enough information. It's like you want to give money to somebody and say, I don't know you. Give me something to work on. So the best ideas for those people is to add themselves to somebody else's credit card, to be an authorized user, or use one of their banks. Let's say you're working with Bank of America, you're working with Wells Fargo. They have secure credit cards. You put money in their banks. They give you a card that is secured by that money, and then you use that credit, and then they charge you for those. It is still considered credit, but they get some money from you to build your credit, or using an authorized user for you to credit history. One very important thing about credit history is that credit history in each person's is averaged. When they go to check your credit history, let's say you have a credit card for 20 years ago, and you have a credit card for 10 years, from 10 years ago, and you have a credit card that you got yesterday. Then your credit history is average between these three. So it's probably showing us 6.5 years between these three. If you want to have a long credit history, 7 years is considered a very good one if you check your credit report, average credit history. Try not to open too many accounts all of a sudden, or constantly opening an account. Make sure you keep the oldest one always open. If you don't want to use it, if it has a high credit, high interest rate, doesn't matter. You just buy a coffee with it and pay it off each month. You don't pay interest on something you don't keep more than 28 to 30 days. So keep that for your credit score, average credit history. That's a very important subject. So make sure you don't open too many in recent days. Keep the oldest one always open. Try to keep what is the best number of credit cards you can have. I have seen people who have good credit scores, but 5 is usually a good number to have. And make sure, the other factor I want to mention is the ratio between used credit and your lines. What is a line? Yes, big deal. So I have some formula for my clients that I mentioned. If you want your credits to be above 780 and above 800, try to keep your credit card usage below 10 or even 5%. How do I do that? Always ask for higher credit credit line. Ask for $20,000 if you can afford it or if you can get it, and then use $1,000 of that. That's 0.5%, right? So in that case, you're showing them that you can have the money and not use it. You have control over yourself. So they'll say, okay, this person doesn't go crazy with his money if we give him money, so he's trusted. They give him more. So get credit cards, all of them with high balances, use less. The next tier is 10%. Next tier is 30%. If you want your credit score to be around 760, 740, max 30%. 30% to 50%, it becomes shaky. Brings it down to 700. You go over 70%, you're going below 700. And that's the area that some loans you don't get approved. I have a lender that has a very good program that they don't accept below 720. But if you want FHA, they go below 600, 620. That's possible. But FHA, you know, it has its own caveats. So to put it together, 800, 10% credit card use. And this is assuming everything else is perfect. Credit history is perfect. You don't have bankruptcy. You don't have collections. All of those things are perfect. And your credit uses this range, 5 to 10%, 30%, 50%. And I would say no. No. If you have a $1,000 credit card, never use more than $500. It's going to ruin your credit.
I have my credit cards right now so that every month the whole balance is paid in full automatically.
It's a great idea. Me too.
Yeah, like I said, I'm trying to get to 800. So that was my biggest issue growing up, was maxing out my credit cards.
And believe me, it's not your fault. They did not reveal those informations. I used for banks before. Even if you have knowledge about it, you're not supposed to talk about it. It's their information. And they guarded it until Dodd-Frank. They didn't want you to know about all these things because they thought their logic was that you're going to manipulate this. It's very difficult to manipulate credit cards. They watch every step you make. It is, they want to get a convict. They check their credit. It's impossible to avoid it these days. You're being watched everywhere with your credit cards.
Yeah, next is that social score that I keep hearing about.
Oh my God.
So what is the range of the scores, and like what is considered like a high credit score?
High credit score, I would say for a conventional loan, anything above 760 is the same. 740 and 760 is still very close. Some lenders don't have add-ons for those. If you are applying with a bank, sometimes they have add-ons. They give you a higher interest rate when you're below 760, but we don't have that. Above 740, everybody's perfect. But when you're in a jumbo space, 780, 790, 800 gives you the best interest rate. If you're applying for ARMs, higher interest rate plays a big role. Again, jumbo ARM, interest only is like the top one, the most risky type of loan. Then you have to have 800 or 780 to kind of get the best rate. And the difference is huge. But, in conventional space, 740 and above. Between 720 and 740, very good, acceptable. 700, 720, you start feeling the difference between the payments and the interest rates. Below 700 becomes harder and harder. Those are the places that we have to put the client in FHA loans because they're not very interest credit score sensitive. Usually it is meant for people with lower credit scores, less history, first-time home buyers, those that we use FHAs.
So what are you doing right now, Brian? It's like, what tips are you utilizing to try and ultimately get to that 850 score?
So first of all, if you are starting a credit, it's impossible to get an 800. So you start with 700. Usually you don't get a 600 unless you have a derogatory remark. That's the technical word, derogatory remark on your credit. If you have bankruptcy or collection, these two are the big ones. And if you have vacancy also, that affects your credit. If first thing, try to remove those. Those are the things that will keep your credit. It's like a big anchor on your credit. It doesn't go up. Whatever you do, those are going to keep it down. Removing those is first. Then you go to the space of how many credit cards you have and what lines you have. So get every 6 months, call your credit card company and tell them, do not check my credit. If I qualify for a higher credit line, please increase it. They usually do that. They usually do it by a very small amount. Let's say if you have a $5,000, they make it $6,000, they make it $7,000. That's enough. 6 months later, you do it again. They add a percentage on it until they reach a certain level and they say, okay, we can't increase your limit anymore. We have to check your credit. Maybe it's a good idea. Do that at that time. But in the beginning, don't allow them to do it because, you can. Keep increasing that. If you have 1 or 2 credit cards, probably apply for the 3rd one, 4th one. Remember, these are called revolving credits. Revolving means you have a certain line of credit. You can use portions of that. So that means if you use 1,000 from 20,000, that $1,000 is revolving. It can be 2,000 next month, it can be 500 next month, so it's changing. There are other debts that are called installments, like a car loan, or you get personal loan, or you get something from a bank for a boat. These are installment loans, and installment loans have a certain specific number. They give you $30,000 for your car, and you keep paying it down until it's paid off, or you sell the car. Those, it's okay to close those because the history of that does not play a role. As you see how complex it is. Some of them have effect on your history, some of them don't. Mortgage is one of the big ones. The first mortgage you get, in the beginning, you get like $500,000 loan. So your debt jumps up. Then at that point, your credit score dips down drastically. But pretty soon after 2-3 months, when you start paying it, it goes up and then it goes past that stage that you have.
Right. Good. Yeah. One other thing that, in my experience that I found that really messes you up too, is if you get more than like 2 credit cards per year, right? So
That
if you're
is,
like applying for a bunch of different cards, so like, how do they want to space that out? Like, let's say you have someone with very little credit and they want to end up buying a house. Like, what is the best path? Like, just go out and just start getting a bunch of credit cards, or what advice could you give people to start off?
Great question. This is something that we encounter on a daily basis. The first step is add yourself to somebody with a good credit score. Let's say your parents, your friends, your acquaintances, they have a good credit score. Become an authorized user on their credit. Make sure you don't mess up their credit because they will cut you off. So that's the first step. If you're in the beginning of the journey, 1 or 2 credits is not a bad idea. Probably start with 1 or 2 if you get approved, because some of the time they don't approve you for those numbers. If you can get 2 within a year beginning, that's not a bad idea because you put it behind. And then second year, when I would say 12 months is passed, then you apply for the next one. Make sure what type of credit card you apply for. One of my best suggestions is sign up for Credit Karma. Credit Karma is an app that you can have it on Android or iPhones. Credit Karma taught me more than I read about credit because I see what is changing my credit. This number changes, it sends you an alert. You learn about it as you play with it. And it's actually designed very nicely. Credit report is a boring document of 20, 30 pages, black and white. But this is actually categorized, color-coded, and all of those. You can see how things are spread out, and you learn about it when you move on. Credit Karma has suggestions for credit cards sometimes. I don't think that you have to take their suggestions at first point, but it gives you ideas. Then you go online, look for the credit card and say, approval odds high, approval odds low. If you're in the beginning of your journey, make sure you apply for the ones that has higher approval odds, the lower credit. Income is important. You have to make sure you're telling them about every type of income that you have. Sometimes people forget they have a part-time job and they're receiving Social Security, this and that. Make sure you put together your annual income. They usually ask you if you are a homeowner and you're paying a mortgage. If you're paying a mortgage, that's a good sign because you have a history of credit. Mention that. But remember, if your mortgage payment is higher than your income, you're not going to get approved. That's the rule of thumb. Your income is $60,000. You make $5,000 and your mortgage is $4,500. So you have less than 500 because you pay taxes too to spend per their calculation. So you have to figure out what to answer for those because, if 4,500, how do you pay that if your income is $5,000? That answer has to be included in your application.
Nice. Okay. That makes sense.
Yeah.
And so another, speaking from personal history, I got a question for you, Bryan. So when I was in my credit building journey, after I turned 18, some of the cards that I took out had an annual fee, right? So they charge you $50 a month, right? And so I've had a card for like 20 years and I'm scared to close it because I don't want to mess up my average history. But this thing has an annual fee and I haven't used the card for years. So do I just keep it open and keep paying this annual fee? Or can I close this card, but it's like the oldest credit card I have?
Right. So this is a tough one. You have to come up with some sort of a bad or worse situation, because if you close the credit card, you lost all of your history. Eventually, I call it a bad tooth. You have to close it, and the sooner the better. That's my opinion. If you are in the process of purchasing something big, of course, no. Keep it. Pay a $50 a year until you did that. After that, close it. First day you signed your loan documents, you got the key, call your bank and say, I'm done with this.
Yeah, spending money for nothing.
Yeah, because there are plenty with no annual, and actually they give you money if you want to open it.
Right. It's just that, these were early on, I'm 700s now. So I don't need these cards. I qualify for much better cards. I have much better cards now. But it's just like you said, that bad tooth that I've been wanting to pull, but I'm just scared that it's going to take me back into the 600s, which I don't.
No, there is another thing that you actually build up on something important. Each one of these factors have a percentage of effectiveness on your credit score. So mortgage late payment, if you're 800, you miss one payment, you're 700. It drops by 100 points. One shot. If your history is shorter, you miss 10, 20 points. It's really not that big of a deal. Sometimes if you are at 746, 15 points make a difference in your, journey. But still, you're going to build it up. You probably have other credit cards. If you don't have it, just go get it. Start doing that. And make them overlap. I'm assuming people got new credit cards in last few years of their lives, and the one with credit card fee is one of the old ones. So if you close that first one and you have another one that you got 5 years, your average is going to change by a few years, and it's not going to affect it that much, probably 5 points, depending on how many credit cards with good stance you have. Remember, when you close a credit card, your credit line declines. So it has a double whammy. One of them, credit history, the line shrinks. So now the portion of your debt to the line is higher at this point. You make sure that you keep raising those numbers so it has a minimal effect. Because if that card is low and you haven't increased the limit on that, it probably is a small card. It's not a big one. If you increase and work on it, and then that will have a bigger effect.
All right. So make your payments on time. Don't miss any payments.
Yeah.
Keep your utilization rate, keep your balance low in comparison to your credit limit. Don't take out too much new credit. So only have your credit pulled, once or twice a year?
Once or twice a year max. And remember, in 5 years, you will have 5 cards. 5 years in credit history is not big. Technically, you have to start having credit cards when you're 16. If you're 20, that's 4 years by then. So you will have ample credit time.
So let's talk mortgages real quick. So one of the biggest things with credit is, so what advice can you give people that are currently buying a house? What are the big no-nos that they should be staying away from if they're, trying to get a mortgage soon?
The first thing that I tell my clients when I meet them, I take the application, talk about all their finances and everything, and they say, okay, do you want to buy something new? And they sometimes say, yes, no, I want to buy this, I want to buy that. I said, so which one is more prioritized, your house or this car or boat or whatever? Usually they say, oh, of course, house. I say, okay, can it wait? Let's make it wait. Do not make any big purchase during the time that you're looking for a house. Especially surprising your real estate agent and loan officer. It can completely ruin the deal. If, let's say you bought a car and the payment is $750. $750 means that you have to have about $1,400 to $2,000 more in income to qualify for the same loan. So if you're not making $1,400 to $2,000 income more, you don't qualify for the same loan that your loan officer approved you for. Do not make any major purchases during the period that you're trying to buy a home.
Yeah, and Bryan, not even major. Okay, so I had a deal where my buyer went out and got a Home Depot card, and I think they were. I don't know what they were buying, but they offer you these
20% off of this.
Yeah, get a discount. Sign up for the card. So they signed up for the Home Depot card. They bought what they were going to buy anyways, and it just killed their credit. Temporarily, but it dropped it enough where we had some issues with the home purchase.
it drops the credit score as well. That's very true, because usually these store credit cards do not have high limits. Remember the rule about the ratio of credit use and credit limit? A Macy's card or a Home Depot card, they usually give you $1,000, $2,000 credit. And you right now you buy two by fours, it's $500. So you used half of your credit at the first point, and you got a new credit, and credit history, credit limit, everything, new credit inquiry on your return, all of these hit your credit at the same time. It's gonna ruin everything. So, as I think well said, do not apply for credit at all during
At
this.
all. Don't touch it.
Don't touch it.
Don't do nothing.
Mhm. Absolutely, I agree.
I'm sure you have some horror stories of being
Mhm.
in escrow and the deal falling apart for some of these purchases.
Actually, my team has, because I'm so strict about these things. I talk about it with clients. I haven't had this horror story before. I keep talking with the client about this and that, but my team had, one of my loan officers constantly having this, and my type of client, for some reason, they don't do that. But poor her, she says, I told them not to do this. They still went there and did it. So unfortunately, it happens. Fortunately, it didn't happen to me.
Oh, good. I like that.
If there is wrong information on your credit report when you check your credit report, definitely make sure to talk to them, and especially in writing. For some reason, they don't respond to calls or emails. Emails are better. They usually respond, but it looks like it's more judicially accepted to write something to them about this. Let's say there is a credit on your credit report that doesn't belong to you, or the balance is wrong, or something is paid off and doesn't show paid off that a while. Something is wrong with your credit report. Make sure they have to. FCRA, Fair Credit Reporting Act, requires the credit reporting agency to comply with this. So this is the law. They cannot dismiss that. Sometimes they go around it, and you have to call this and that number. And but it's a pretty important thing. Check your credit. Nowadays, with identity theft, there are things that are happening, and it's a must that you have to check. This identity theft, some people suggest credit monitoring. I don't think anybody is better than monitoring their credit than you are. Those systems, sometimes they are designed for different purposes. Remember, they're there to make money. So if your credit gets hit and they make more money, remember, most of them are designed by Equifax and TransUnion and all the three credit bureaus. And I really trust myself with my credit better than those people. Just let them handle it. Don't do that.
I
Very
love
simple.
Credit Karma.
It,
I've used
great,
Credit
isn't it?
Karma forever. So I get those little alerts like,
Oh, yeah.
congratulations, your score just improved. And then you can kind of, oh, well, what did I do recently? And then you can see the effect. And it's like, oh, I'm going to do that more
That's what
often.
I'm saying. That's exactly, we learn about credit from that app. That's what I'm saying.
Right.
I read about it a lot, and then I used it. I've learned more how to play with this. We really did. My wife got her credit recently, 5, 6 years ago. Now her credit is 816. We played with these things, and we did everything right, jumped up. Now I have to run after her.
You're going to get there, Brian. You're going to get there.
Thank
So,
you.
um, you mentioned if you, let's just say, you had some derogatory remarks on your credit, okay? you missed a payment, your credit's too high, or you notice something on there that's maybe not yours. How do people go about getting these things removed from their credit? What's the best way to go about doing that?
Okay, so let's say you noticed there is a credit card on your credit report and is being used by somebody else. First thing is that you call the 800 number for each credit bureau, because it's usually reported on all three, sometimes two, sometimes one, depending which one it's being reported. First, you call them. Because the procedures change, this is the fastest you can talk to somebody. But then get enough information to prove that this is not yours. Sometimes proving a negative is very hard. So you go by saying, I've never applied. This is my information. It doesn't apply to me. I've never been in this city or place, or then I have a document showing me I was in this place and this during this time. And you start building a case to say this is not me. Then put it together in a letter to those bureaus. It's the information about those bureaus. You just type it on Google: address for Equifax, address for TransUnion. It shows up. You
And
send it to them.
this is all something you could do on your own, right?
Oh, yes, yes. You don't have to hire a lawyer or something to do it for you. The other way to do it, which is an interesting thing, is that, have you heard about credit repair agencies?
Well, that's what's going to be my next question, because I actually have it on my list to, do a podcast with, maybe a credit repair company. But in my experience, they're not all legit. So, like, what is your experience with these credit repair companies?
You are absolutely right. Remember when I said banks do not want their secrets revealed? A lot of the things that they know is like us. They do it by try and error. So sometimes they claim things that they cannot do. But during last 5-6 years, they have enough experience that they are getting better at things. I have seen they do tricks that I don't think they are necessarily right, but they add somebody to somebody else's credit for a certain amount of time, then remove it, and then do play with these kind of things. And it does increase people's credit scores. My preference is that you be your best advisor. But then sometimes it's out of your hands. It's complicated. You don't know what to do. You need it go fast. You have to talk to somebody with experience, let's say a loan officer that works with one of these and have seen their experience, or a real estate agent like Jason, who has worked with some of these companies and have seen results, to trust them with that. But trust with caution. Always check everything. This is really important. I know sometimes I am doing something that against my own belief that trust is important, but trust by verify is a good idea in that arena. And there has been some weird things going on with credit repair agencies, that especially in the beginning, they didn't know what they were doing. It was just completely a new thing. Now they're getting better and better. It's a multi-million-dollar business now. I'm thinking there is a hand of the credit bureaus in there too. I can't prove it yet, but believe me, it's going to come out.
All right, Bryan, that was awesome. If anybody out there wants to get a hold of you, that's interested in getting a mortgage and has questions on, their credit and what they could do to, get it to that point where they could get the best rate, what is the best way to get a hold of you?
The best way would be a call to my number, 805-626-0014, or search my name, Bryan with a Y, Zadeh, Zadeh, last name. And I don't think there is anybody exactly the same. There are a couple of other peoples, but Bryan with a Y, Zadeh is unique. And you search me on the web, you can find it. But phone number, call me, text me anytime. Jason knows I'm awake 24/7 sometimes.
All right. All right. So let us know in the comments, what are some tips maybe that we didn't cover? Anything about, maybe we should have covered? What do you find is the best way to get your score the highest, the fastest? We'd love to know. Thank you so much again, Bryan. If you guys found value from this video, please make sure to like and subscribe, and we'll see you on the next one.